Let's get straight to it. It's red across the board, and as I was saying repeatedly earlier, we've got the JSE pretty much following in line with global markets at this stage.
Yeah, it will do, of course, because the conditions that are driving markets lower are very much a global phenomena. But only a week or so ago, it was all green and everyone was quite happy, of course. So it just shows you how quick the situation is changing and how fluid it is at the moment. And that's just really the characteristic of a sideways, very volatile market. But the drivers right now, of course, are Europe and the inability of France and Germany to agree on how they approach their fund. And of course, the USA, it's also an important reporting season. And so all eyes there as well. So these are the two drivers that are creating this volatility at the moment.
Alan Chan was joining me at the desk a little earlier, and we were looking at the currency markets, and I asked him, where his confidence level's sitting in terms of whether Europe is going to pull it together at this weekend's meeting. Where are you sitting?
Well, we have concern, of course. In a sense, we do believe that it's in their interest to get this together, and Germany and France most likely reach some compromise because it's obviously in their interest. The concern is you've got the two major players, of course, which have a little bit of a loggerheads there. But I think that they will come through and have an agreement, of course. Difficulty is still thereafter. You only have an agreement. You've just got to fix this, of course, go through the austerity measures. And what we've always been saying is it's fine to have austerity measures, but look out as well for the political fallout. And we've been seeing quite a lot of that, of course, in Greece more recently. Of course, it even touched Italy, for example. So it's questionable how these various nations and how their elections will go, not only from the side that's needing help, but what is the political ramifications within Germany, for example, which not all of that population is in favor of assisting Europe, for example.
Yeah.
So it's getting politically very complicated.
Of course, it's politicking all round. Agreement seems to have been reached that Greece will suffer a large default. Where do you stand in that regard?
Yeah, so it's anywhere from 21 to 50, and it's probably going to be square bang in the middle. So 35 or so is probably your answer. It's very difficult, of course, to make that call, but it goes without saying that a default is on the cards. Yeah. It's how much can the banking system absorb, of course.
I ask the question because, of course, the ramifications have been felt far and wide. And I'm just pulling up an article that I pulled through from BHP Bulletin this afternoon saying that, it's cautioned in the face of the short-term market volatility, warning that they've got increasingly wary customers out there, that customers are really repositioning, and that demand scenario moving forward is really being brought into question within the resources space specifically.
Yeah, and you've seen, for example, even though you see some good production numbers, you mentioned, for example, some in the States, bear in mind they're off low bases, so the absolute levels might not be that strong. The concern, of course, is with Europe and the issues surrounding Europe, what it might mean for China and growth in China. I think there's a general feeling that the Chinese growth story is set to slow as well. And so they may well tap into stockpiles whilst they think commodity prices have fallen. And if you take iron ore, for example, of course it has fallen quite significantly. For the South African producers, their counter to that in terms of their earning streams is that the rand has weakened. But nonetheless, from a global dollar investor, commodity prices, be it copper, be it iron ore, have started to come off. And that reflects the weakness in global markets, but also the concern going forward that the world, and really for next year, is going to be in a very soft patch, of course.
Of course, Kumba Iron Ore today reporting a 2% rise in third quarter output, but saying that it sees an increase in the volatility of iron ore prices in the near term. What's your approach towards the resources segment in South Africa in this context?
So that now offers quite a tricky space, because if you believe that the world will see it through, that Europe holds it together. There's a default in Greece, for example, but nonetheless, economically speaking, it's intact. And China, although growing slower, is able to have a growth rate which is still substantial, of course, in global terms, be it 7 or 8%, and that the underlying demand, so the rundown of supply might happen, but you get back into the demand equation, then it looks as if some of these resource counters offer phenomenal valuations, of course, because you're getting, Billitons and Anglos at P's of 8. So if you forgot all the troubles, you would think, well, these certainly starting to offer value at these levels. But of course, that just really reflects a situation where a large part of the investor base is saying we may not see it through that easily, of course, and driving valuations down too.
Where we've got those PE sitting low, it's the E in the PE that's actually causing the concern. Let's put it in, because it stands in contrast to the retail segment at this stage. We've got Clicks having reported an 18% increase in full-year headline earnings per share today. But while that is encouraging, valuations have been on the high end, and so investors haven't necessarily been jumping in as aggressively. They've been a little bit hesitant, specifically from a South African perspective, towards the retailers in general.
Yeah, and I think it's partly because the retailers have had such a good run over time,
yeah.
if you look at it over the last while. So there's a sense while global economies are slowing, invariably that'll affect the South African consumer in time. And so there's a little bit of hesitation as to the sustainability of this. Also, when you look in, for example, the clothing retailers, where a large part of their product is imported, and you're starting to see a weaker rand, that might affect margins to some degree. So there's some concern. The biggest game, of course, will be when do you take that relatively high valuation play and switch it into your cyclical play, because there you have the valuation differences which have started to spread quite wide. And of course there will be a time for that when you want to move out of those retailers into those miners, of course.
Is the time now? Because look at these numbers from Mr. Price. It sees headline earnings per share up 18 to 23%, but bearing in mind that their margins may well come under pressure moving forward, given the fact that we've seen extreme weakness filtered through in the rand. So those imported products are going to be becoming a little bit more expensive.
Becoming more, and the question is how much of that price can they pass on to the consumer? And I think the South African consumer might enter a difficult space next year. So to some degree I think they'll have to absorb that. And maybe it's a little unrealistic for Mr. Price to continue at this pace, but it's a very solid and sound operation, of course. The time to switch, we would suggest, is not just yet. And we prefer to stay fairly defensive, South African focused. So companies like that, and just wait a while still for those cyclicals. Their time will come, but I think the whole global scenario, the traction in the US economy and the restructuring of the European situation, it might take till Monday to make a plan, but it'll take months and years
to
for
actually
that
get it working.
To get it working and fulfill. But of course, the market won't wait for the plan to be completely finished and done and dusted. It'll preempt that long before. But I don't think there's necessarily the confidence in markets just yet to believe that a plan is going to work, because it doesn't even know what the plan really is right now.
Absolutely. Well, Paulo, let's leave it there. Thanks so much for your time this afternoon.